The destruction of the halving cycle as a narrative, I think, is a prerequisite for us to have a very powerful bull market. And the reason for that is that if you believe that all you need to do in this asset is to sell it every 4 years, just think about this lot. It makes no sense to hold Bitcoin for the long term. If you think we are determined to have 4-year repeatable, just look at the calendar, circle November 15th or October 6th and just sell it X amount of days after the halving. That's all you need to do. I had a guy telling me it's programmed. Satoshi programmed it for Bitcoin to rise and fall. I think it's a bunch of nonsense, but just imagine that was only the case. Why would anyone have a long-term investment in Bitcoin? Just trade it. It's a tradable asset. But of course, we don't look at stocks like that, but you don't look at bonds or fixed income like that. You look at for stability, predictability, but you buy it because it has liquidity and you could sell it very easily if you need to. But in Bitcoin, you have this degen culture where what does it do? It levers up in certain years and then it tries to time this whole exercise in a big game of chicken with everybody else in the marketplace and trying to get it right. That is, in my view, it's a headwind for institutional adoption. Institutions do not want to buy an asset that's going to fall 80, 70%. I think my new norm is what we saw in 2024. And we talked about this in the last podcast, where you see Bitcoin trade in a range for 6 months, like post ETF launch, and then we rip higher to a new level. And then you trade in a range, say 90, 80, 100K for a range, then you rip higher. If Bitcoin were to do that, that would be extremely bullish for long-term investors. It would be bullish for institutions looking at it.